Japan's financial collapse, how it could trigger a global crisis. What if I told you that a quiet economic disaster in Japan could be the trigger for the next global financial meltdown? While most eyes are on the US and China, Japan, a nation with 2% of the world's population, may soon shake the entire global economy. In this video, we'll break down why Japan's financial system is buckling under its own weight, how it's connected to your country's interest rates, and why the collapse of a bond market thousands of miles away could drain your investment portfolio. What's happening in Japan isn't just their problem, it's a global warning. Chapter 1. Japan's slow-motion crash. Japan has entered a recession. Growth is stalling. Inflation is persistent. Major companies like Toyota and Honda are underperforming. Everyday essentials like rice remain expensive, hurting consumers. Despite the government's attempts to intervene, success has been limited, and the data is grim. Chapter 2. Why Japan matters globally. Holds over $1 trillion in US debt. Owns vast amounts of global stocks, corporate bonds, and real estate. Why? Because for years, Japan's interest rates were near zero. This made borrowing cheap, fueling a powerful global phenomenon, the yen carry trade. How it works. Investors borrow yen at near zero rates. Convert it to dollars, invest in US assets with higher returns, earn the spread, equals free profit. This trade has quietly funded global growth for decades, but it relies on one thing: Japan keeping rates low. Chapter 3. The carry trade is unwinding. In 2024, the Bank of Japan did something unexpected. It raised interest rates. The yen surged by 10% in a week. Japanese bond yields spiked. Stock markets trembled. The result? Investors scrambled to exit the carry trade. They sold US assets to cover losses. Bitcoin and other markets tanked. This was only the beginning.
Or like this carry trade, which seemed like the easy trade, is no longer. So you start exiting fast and it starts to be self-fulfilling, unwinds and unwinds.
In 2025, bond auctions in Japan began to fail. Investors are demanding higher interest, fearing Japan's long-term stability. Chapter 4. Japan's debt time bomb. Japan's debt to GDP ratio is over 260%, the highest among developed nations. That's more than twice the US level. With an aging population and fewer young workers, Japan's tax base is shrinking, but healthcare and pension costs are ballooning. The only way to plug the gap? Borrow more. But with rates rising, this debt load becomes unbearable. Every 1% rise in interest costs Japan $85 billion more per year, more than its entire defense budget. Japan is cornered. Raise rates to protect the yen, risk of economic collapse. Keep rates low, watch the currency devalue and imports skyrocket. There is no easy way out. Chapter 5. The global ripple effect. Japan has already started reducing its US Treasury holdings. If this accelerates, US interest rates could spike. Global markets could lose liquidity. The Fed may lose a major financing partner. Even a whisper of mass Japanese bond sales sends shockwaves. Why? Because if Japan stops buying, who picks up the slack? Chapter 6. Losing faith in safe assets. Japan's government bonds were considered among the safest investments in the world. Not anymore. In 2025, yields on 30- and 40-year bonds hit record highs. The message is clear. Investor trust is fading. Some investors are fleeing into alternative assets. One Japanese firm, Metaplanet, saw its stock explode as it increased Bitcoin exposure. A signal that confidence in fiat assets is eroding. If Japan's safest bonds are now volatile, the implications for global finance are massive. Chapter 7. What happens next? The Bank of Japan owns over 50% of its bond market. It has printed money for years to stabilize the system. But now, those tools are no longer working. As Japan faces the limits of monetary control, the world watches closely. because Japan's problems could soon become everyone's problems. Rising interest rates, falling bond confidence, increased market volatility. The show can't go on forever. Conclusion, a global wake-up call. Japan is the canary in the coal mine, a heavily indebted, aging economy trying to maintain growth with tools that no longer work. What happens in Tokyo might not stay in Tokyo, and as investors begin to shift towards scarce, decentralized assets like Bitcoin, one thing becomes clear. Trust in traditional systems is eroding. If this story opened your eyes, hit like, subscribe for more, and tell us in the comments, is this the beginning of a global reset?